Hello, everyone. I guess we have Stephen Colbert to thank for today's rout in the stock market. But that's probably not a good excuse. However, anybody and everyone finds a different excuse for what just happened today. Uh, Viewers, readers of this website know that this is not shocking whatsoever. So let's just go ahead and go on to the actionable signals. Intraday, I went ahead and took action instead of waiting to the end of the day. A long-term trend line started to break down intraday, and I went ahead and moved back in. I took 20 to 25% off of all my hedges yesterday thanks to the bullshit dead Fed cat bounce rally that we got off of hopium out of Janet Yellen's FOMC statements. That was quickly reversed, slammed shut today on extremely heavy volume. The only thing I find funny is that every single fucking article I read yesterday was bullish, and today we have quite around the opposite. So it's just funny how short term people's mindsets are in this market, and that's all you need to know about the current tape you're in. It's a bunch of insane day traders just trying to get every little tick. So, whatever, it is what it is. The market sold off heavy today and the rout was everywhere. So what we're going to do, I added 2.5% of my hedge into SQQQ intraday, and SRTY added 2.5% of that hedge in that one. At the end of the day today, though, the SOX S, the short semiconductor ETF, 3 times inverse bearish ETF. I'm going to go ahead and add 5% to this one because it looks like semiconductor stocks are ready to just all out, just fall apart. I'm also going to add 5% of my account capital to FAZ, which is a short bank stock, 3 times leveraged bear ETF. Goldman Sachs, JP Morgan, Morgan Stanley, Wells Fargo, Bank of America, all massive breakdowns today. On top of that, I want to add 5% to SPXU because in some miracle fashion, the S&P 500 is only now breaking the 50-day moving average, and it's doing it on heavy volume, confirmed in every ETF. Everywhere. So the market is finally breaking. We're still above the 200-day moving average, which the damages to individual stocks. Like, look at these leaders. Look at Priceline. Priceline. Look at that distribution. It's an all-out get me out of here now kind of market. Look at Facebook, a rejection of that move yesterday on even heavier volume. Look at Tesla, rejection right at the 50-day moving average on an uptick in volume. This is not healthy action. Palo Alto Networks, trying to reverse that breakdown, runs right into the 50-day moving average in reverse. On top of that, we have the 20-year Treasury bond fund giving a pocket pivot point signal. So treasuries want the yields, want to rise, and that means higher interest rates. Don't forget, the average American has over $7,000 worth of credit card debt. The average American that's in default has over $15,000 in credit card debt. If interest rates rise, I don't see how that's going to be healthy. On top of that, short-term rates are starting to rise. This SHY by proxy, the 1 3-year Treasury bond fund, doesn't move that much, but you can see as it's moving off the 2013 lows, short-term rates are rising. This market is starting to price in that the Fed is going to have no choice but to raise interest rates. It's very, very, very rare that you see the market sell off before rates rise. So I would take this as a very bearish sign in the stock market. But we'll see. We'll see. IYF, you see the financial sector breaking down. The IYT, you see the transportation stocks breaking down. It's just an all-out rout. I mean, there's really nothing else positive to say. We have 2 full sells, GMED, SCOR needs to be completely gotten rid of. I'm also going to take off half of the CRVL position. It's still trending higher, so I don't want to get rid of all of it. CLFD, if it can close below that March low, heavy volume or not, I'll get rid of all this. But for now, it's a 50% sell. And the new long yesterday, it's actually held up pretty well today. But still, I want to get out of 75% of it, all small positions. The only possible long signal is SIMO. And when I look at it on this log chart, I really like it. However, when I go back and review the history of this stock going back to 2010, you can see that this stock loves to break out and not work. So this stock is just a stock that doesn't like to trend. So I'm going to go ahead and pass on it. I had to look at arithmetic charts on other charts, and the best one that I looked at was FinViz. So let's go over to FinViz and show you SEMO on a daily here. So you can see the breakout here, the base is very, very, very short. We would need a much, 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 much longer day to consider this one bar move good enough. And to be honest, in this market, I shouldn't want to take anything long unless I got a huge volume move and a huge bot move. While the bot move was very strong with relative strength money stream, it just wasn't really strong enough in this tape. And you can see TSV is going in the right direction, but MACD, that bottom blue and white line, it's going in the wrong direction. So I don't have full confirmation on all my momentum indicators. So in a tape like this, I want to pass. However, if you think that this one can buck the trend, go for it. But just a quick look on an arithmetic chart going back here, you can see that when this stock tries to break out, it just doesn't work. And then when it does break out and work, it eventually doesn't work. So this is not a trending stock. I am going to pass on SEMO and wait for it to maybe build a longer base side to go long. So remember, SOXS 5%, FAZ 5%, SPXU 5%, SRTY and SQQQ I already added 2.5%. Half of my portfolio is going to be short and leveraged ETFs in my IRA. That means I'm going to be 150% short. I have about 40% cash, about 10% long positions. It might be about 15%. I'm not exactly sure. I just know that I'm really heavily short here. Hope I'm right. If not, you know what we'll do. We'll cut our losses.